usual, I hope you're all okay. Luke here from LAGFX. We are back today with another Sunday Sessions video. Today, I'm going to go over the three pairs that I am looking to capitalize and trade this coming week. And then what I'm going to do is pass you over to our analyst James, and he's going to do the same. I hope you enjoy my analysis. If you are unsure about anything I go through, if you have any questions or queries, don't hesitate to leave them in the comments below. Now, the three pairs that I'm looking at today are the Great British Pound to the US dollar, the Euro USD, and the AUD USD. So jumping straight into things, we can see on screen we have the Great British Pound to the US dollar. Now, last week we placed a lovely buy position, as we can see here. We caught a lovely trade there with that, and realistically we wanted to see price continue trading us higher into our point of interest, as we didn't quite have that penetration that we were looking for from this high set here. What followed was clear bearishness, creating a low. This was a fractal break of structure, but it was in fact holding this low here, which is our higher time frame structural low. So in the eyes of the higher time frame structure, it was in fact following bullishness. So moving forward, my bias is still the same. We are wanting to see price trade us into this zone, give us the distribution, the candlestick formation, or the break of structure to the downside that we need in order to enter in on the market. And then once we've been presented with that confirmation, that's when we can look to get involved in those longer term sell positions. Now, you'll notice here I've highlighted two zones. If we just go down to the 5 or the 1 minute time frame, we will see how they are actually unmitigated areas within this high volume bullishness that took place during this rally. So we could see price trail us back into these zones before taking us higher, in which case we could still look for those buy opportunities. But what we would want is for price to trail down. So if I just get my path tool, price to trade us down into one of these zones, present us with some signs of bullishness via a bullish structure, a BOS to the upside, accumulation of some kind, and then trade us higher into our higher time frame point of interest, where we will then look for those sell opportunities. Once those have been presented, then we can close our buy position and look to sell into this market. Now moving over to the Euro US dollar. As we can see, we placed a sell position. This did really well for us. We gained over 100 pips on this trade. We had a nice refined stop loss there, thanks to looking at fractal structure and being able to get in on a refined entry. However, we wanted to see price trail into this zone and then look for those buy positions taking us higher. That wasn't presented. As we can see, what looks to have happened is price has given us our bearish impulse, taking us higher, and this here is obviously the retracement that we want to see price trail us back into this point. But what's happened, if we then look at fractally, is we've had a high set, a low set, we'll then have a higher high set, a higher low set, and this will continue until it trails us into this zone. So it is just following that fractal structure, and it looks like it's disregarding this zone here. Now, how can we look to get involved in this? Well, realistically, I'd want to see a break of structure take place. So this high here that was created through this first impulsive wave from the retest, I would want to see get broken, a new higher high to be created. Then what we'll do is we'll look for confirmation that price is actually taking its fractal retracement throughout this higher time frame bullish retracement. Once we have that confirmation, we can look to sell. And then as soon as we have the break of structure to the upside, taking its next impulsive wave, that's when we can look to get into those buy positions, but actually hold those buy positions to our zone here. So I'm going to sit on my hands come Sunday night, Monday morning, wait for price to trail up, break through, create that new high that we want to see, and then we'll wait for the confirmation of price to go bearish. Then we can look for those sell positions, close those, look for those buys, and then hold them through to this point. Once price trails us into this zone, if you've been following my analysis for some time, you'll know that I am looking for those longer term sells. This market is very much bearish, higher time frame, so we want to look for those sell positions. So as soon as price has trailed into the zone, giving us the confluence and confirmation we need, I will be looking for those longer term sell positions and holding that throughout. Finally, moving over to the AUD USD, very similar. We are wanting to follow the higher time frame structure, so we want to be involved in those sell positions. As we can rightly see, price is trailing us into this supply zone, into my point of interest. I'm wanting to see price trail us into this, give us that confluence of a reversal, and then we can look to get involved on those sell positions. This is on the 4-hour time frame, so we could look to get in on those buy positions, trailing us into this zone. As we can see, it's 128 pips away, so there's no harm in looking for those temporary buy opportunities. However, what we'd want to do is look fractally. So as we can see now, looking at the 5-minute time frame, we'd want to see some kind of last sell to buy candle. I can see one here. So if we just grab our rectangle tool, highlight this area like this. So what we could do now is actually wait for price to trade us down, give us the confluence or the confirmation that price is now ready to take its next impulse higher, and then we can look to get involved in those buy positions, trailing us into this zone where we'd then be looking to close those positions and look for those longer term sells. So as you can see, I have kind of got the same confluence, the same bias with all three pairs that I've gone over today. We just need to wait for a little bit more confirmation with all of them. As soon as we have that, as soon as we have the penetrations of the fractal zones, we can then look to get involved and hold those to the higher time frame zones. Once we then have the confluence of those reversals, we can then get involved in the longer term swings, taking us lower into the market, where we can really look to capitalize on those sell opportunities. Now, my analysis has been quite quick, quite brief, but I hope I've just gotten straight to the point. I hope you understand where I'm coming from, what I'm looking to see. As you've rightly seen, we can look for those buy opportunities into our longer term sell opportunities, highlight those areas, and keep your wits about you. If you want to follow exactly what I'm doing on a regular daily basis, join the Learning Lounge group chat. It's absolutely free. We post all of our updated content in there, so be sure to join that. Now what I'm going to do is pass you over to James. He's going to run over his analysis and give you his rundowns on the markets he is looking to trade.
Hey everybody, hope we're all doing well today. Hope you enjoyed some of the analysis that Luke has provided for you. I'm going to be starting out here on the euro to US dollar market because as of, let's get the exact time, so pretty much Friday early afternoon, price played out perfectly. So my bias on this market for a long time, I've been updating a lot of the guys in the VIP chat with video updates on a regular basis. So anyone coming from the VIP chat probably has a very good understanding already of exactly what I'm looking for inside of this region, what my bias is, so on and so forth. So obviously we were range bound for some time, and we were seeing there were some major demand zone reactions. So we had a zone from a very reaction from a very refined zone in the market, which was the 22nd of July, so end of last week pretty much. We had the reaction from that, a large move higher, which came to deliver a displacement or change of character of some of the intermediary or fractal protected highs in this region, liquidating some more, and pretty much it seems that we never quite had enough demand to cause the major reversal higher, because obviously longer term our expectation for this market is the fact that this is our first bullish impulsive wave of the higher time frame bearishness. So we've pretty much just been looking for price to pull us back into a demand zone, react to the zone, have enough demand introduced so that it can outweigh the current supply in the market longer term to allow us to create the next impulsive wave higher. So obviously we had early signs last week that this was a zone that was going to cause such movement. That never happened. We had some more consolidation, heavy push down, and it appears that down in this region is where we've had somewhat of an accumulation, which has come to tap an overall sell to buy candle. I had a more refined zone that I was hoping to get entries from. We see that on the 27th around 5 p.m. We came all the way down, didn't quite give ourselves a tap, but we did still tap into the overall zone, even if we didn't the refined one. From here, we had a large move up, a nice reversal. Luke managed to catch a very nice sell position within this region. The low that was created was a higher low, recting somewhere inside of this wick where we probably had some form of a sell to buy, which I may go and refine off camera. But moving forward, we reacted from that. We had an accumulation. We then had price come and break this fractal high, so signs to us that we are willing to go bullish. We see price then trades higher. We break that high, and then as soon as we broke that high, I was watching the market. We had a fractal protected low broken within this intermediary bullishness, From there, my bias was right. Let's start looking inside of this impulsive wave, so from A to B, and looking where C will be created. So looking for demand zones inside of that region. You see that I had these two drawn out. I actually posted this through into my group chat, into my VIP chat, saying these are the two zones I'm looking from. Price came down perfectly. Yes, it did wick through and liquidate this zone, but we see that a lot of what's happened here is the main candle itself is holding within the zone. We just have the odd few wicks where price has obviously been unable to sort of hold exactly in the zone. But that is exactly what will happen when we refine our zones very much, because what's happening is that when the institutions are deciding, right, we're going to open sell positions here to push price down into it, they can't stop price at an exact level. So when they're executing sell positions, wherever it may be within this region, yes, we need to see price hold that zone in some regard, but if it wicks out and comes straight back in, we understand that, okay, yes, it's wicked through, but the institutions have instantly corrected that and ensured that we are just seeing that as a liquidity sweep. We had no candle close and hold outside of the zone, so that keeps it valid to me. So we see that what happened is this would have been a fractal protected high, and we'll even go to a lower time frame just to view this slightly more in depth. So this move, we had the high created, which came to create the market low. So we were looking at this as a protected high in order to confirm the continuation of bearishness. Of course, what we had there was a change of character delivered. The second that price blew through that, we had the retest back down to some position somewhere inside that region, and next impulsive wave higher. Pretty much here just a reaccumulation or a rally-based rally, and we see that we've got this overall impulsive move higher. Now this is a great reversal, which, as I said, happened around 2:50 p.m. yesterday, so on Friday. We then came back down, traded into a sell to buy candle. We would have had, I don't know, a 5-second accumulation in there, and then the next impulsive wave higher. So moving forward longer term, our bias is for price to exceed these levels, overall to break through the highest point within the range, which is this, and then this here. So these are all liquidity highs that we are expecting price to target. So we can mark those out, and that's our expectation for price, because we believe that from this move it should want to go and liquidate all of the highs in the market. But as of right now, shorter term, we're at least expecting within this impulsive wave for price to come and exceed the previous high in the market, which would be this. So as a result, the point I was trying to make is that we can look inside of this region now and see if there's anywhere where there is demand zones remaining that we may be able to get involved from buys on. So for starters, we can short on that because we know that's already been mitigated. That one's been mitigated. Now looking inside of here, let's go to a 30-second. We could see a nice deep mitigation all the way down to this major sell to buy. So we can have that as a zone where we can set our alert. But then obviously inside of this we have many other regions moving forward that price may also want to react to. So ideally, when it comes to the mitigation in areas like this, we want to see it pull back and mitigate all the positions remaining. So I'm just going to keep this one highlighted. This is the one I'd like to see price react from. So setting an alert at 1.0184 and just waiting to see price tap in, alert me, finding reversal and accumulation, and then looking to take buys all the way higher in this market. So now the US dollar, Japanese yen. This has become a very heavily bearish market. I'd say for the last, what's this, just over a week, 8-9 days. Now, there is very minimal amounts of pullbacks, and as of right now, we're seeing that there's evidently a lot of supply in the market, because we're literally just seeing a drop, base, drop, another base, another drop, another base, another drop. So pretty much just like redistributions. When the market is like this, it is quite difficult for us to get involved in positions, because it's a case of looking on the lower time frames and finding aggressive entries. However, it seems that what's happened here is we have been delivered with a nice pullback. This could be an indication of a longer term retracement. If so, you see I have many zones highlighted, pretty much just areas within the move down where we have left a footprint, left an unmitigated position, which I'd like to see price eventually trade us back up to. So we'll have to see what happens here. Maybe this is the start of a correction way back up. Maybe it isn't. Until this low is broken, we will not know. I'm going to set my alert at this low. If price breaks through that, I'll be looking again on lower time frames for more aggressive sell entries. But if we come to exceed this high, we know, right, we can start now looking at some of these supply zones in the market for price to come and tap to, reverse from, and get involved on longer term sales. We'll now head on over to the Australian dollar US dollar. I was actually hoping to get involved on a very nice position in this market at the end of the week. Just an example I was showing to some of the clients in a VIP chat. So we see that we had a nice refined zone in here. The very last buy to sell with inefficiency here. No price action returning to it. Eventually price did trade us back in. We built liquidity, we cleared liquidity, we delivered a very slight change of character, we traded back up, reacted to another supply zone on the more fractal time frames. We delivered with another distribution, liquidity built, liquidity cleared, change of character. We could have gotten involved after the change of character. If not, we saw price pull back in, mitigate another buy to sell, and then it broke the low, so could have found another entry in this region. Now this is an example of where the market has literally delivered us with perfect price action. I cannot fault any of that because of the fact that we waited for all three steps of our entry confirmation to be delivered, and we were delivered so multiple times. The only thing I was hesitant about was the fact that this was happening about 5-6 p.m. on a Friday evening, so we literally had a couple hours left of market before they closed for the weekend. So I was quite hesitant there, just saying, look, it's so far towards the end of the week that it's probably best for us to just let price play, and if this move does happen, getting or finding re-entries on the Monday when the market's open, because a lot can happen over the weekend that can tilt the markets and throw our bias off, throw the trade off. So I was fairly hesitant about that. Either way, price has actually come through to blow through that high. So what my expectation is moving forward is that we'll actually now trade back up, watching this higher of the two supply zones I had drawn out, this being one, this being the second one, and pretty much just hoping that we see price trade in, tap in, find reversal, find entry confirmation, then getting involved in longer term sells, because if we can get involved on longer term reversals, our final target is all the way down here. So we are looking at, I think it's around 300 pips worth of movement, 330 pips. So we can get involved in positions, nice refined positions. We're looking at 50 to 100 RR returns on that. So definitely a very pivotal moment for price if we can find entries in the market, certainly sell entries. So keep your eyes peeled. I'm seeing this longer term as a potential reversal and start of the new impulsive wave lower. So that is actually going to conclude my section this week of the Sunday sessions. Ran through Euro US dollar, US dollar yen, and the Australian dollar US dollar. I spent a lot of time on Euro US because that is a main market I watch, and I believe that coming into the next week we could be in for a nice market to trade. If we break out of that range, we become heavily bullish. It should provide us with plenty of trading opportunities. So if you enjoyed any of this, if you want updates on the markets, make sure to get involved in the Learning Lounge. If not, and you want to take your game to the next level, maybe even look into the VIP chats. We have just created a new scheme of that. Watch out for a video coming soon that will explain exactly what that scheme is, but pretty much you're just getting more value for your money, and you can look to just join a singular VIP chat, whereas it was just joint. You can either get involved with Luke's if you prefer his style of trading, or mine if you prefer mine, and it'll actually cut that monthly cost down, so you're actually getting more value for specifically what you want. But we will update that in another video. We'll let you know about all of this at a different time. As of right now, I hope you have enjoyed this Sunday sessions, and we will see you next week.